So here's the question. What do you want to own when the dollar is falling? What's the best thing to own when the dollar is falling? And is that always a good thing? This week, we're going to look at the dollar and we're going to take another look, yet another look at banks to see if they have bottomed and what we need to look for to know that the all clear has been signaled. Stick around. Hey everybody, RC Peck here with Fearless Wealth, and this is my weekly video to look at what I think is most important. Now, a retiree should not be changing their approach every week, right? So I bring out information each week just based on what I'm looking at, but that doesn't mean you change your approach daily or weekly. But what I hope these videos do is give you an unbiased view of the markets by looking at the price chart and just maybe doing a little entertaining at the same time. So what I look at first today is two fast food companies. One used to own the other, and they're saying something very different about what's happening in the second half of this year. Then we're going to look at banks a little bit, and then we're going to talk about the dollar and really understand more about what goes up when it goes down. So let's do this. Let's jump over to the price charts. And what you see here is McDonald's. Now, McDonald's is a $215 billion market cap company, and it is at new lifetime highs. Now, McDonald's management says they see the economy slowing later this year, all right, based on their numbers. Now, they used to own, let me get my cursor over here, they used to own a company called Chipotle. Chipotle, which is basically a quarter of the size of McDonald's, they see the second half of the year really good. Now, this is interesting for a couple of reasons. One, Chipotle is definitely, I forget what it's called. It's called like fast fresh or fast casual or something. I might even be getting that wrong. But Chipotle has different customers than McDonald's does. So maybe they're both right. Maybe Chipotle seeing their numbers says, hey, the second half of this year is going to be good. I'm calling that the top 10% of the company because Chipotle is pretty darn expensive. And Chipotle just went out at a new lifetime high, right with McDonald's itself. And then let's just say McDonald's is everyone else, call it the bottom 90%. And they're saying there's a slowing. So both could be true, right? We could see the top 10% doing much better the second half of the year than the bottom 90%. Whichever way we slice and dice it, both companies, one at $57 billion market cap, that's Chipotle, and McDonald's at 215, just generally, let's just call it 4 times the size. They both went out to new lifetime highs. So net of everything, they're both doing pretty good. So that's the first thing I wanted to show you. 2 different companies, same industry, 2 different clientele, have a different outlook for the second half of the year. That's the first thing I wanted to cover. The second thing I wanted to cover is banking. All right, so here is KRE. Let's just clean this up so we keep it simple here. This is the S&P Regional Banking ETF. The reason I wanted to bring this up is because it's still below its pre-SVB, Silicon Valley Bank implosion. It's still below, it's still making lower lows. And so one really can't say the bottom's in. Now, technically, the bottom's in when we're making newer highs. And right now, the highs are getting lower and the lows are getting lower. So from a banking sector point of view, smaller banks, not so much. Now, the banking sector itself came out in a New York Times article saying, hey, we're fine. So I don't know. I'm going to go with the actual stock market and say maybe parts of the banking industry are fine, but as a whole, it still has a lot of cleaning up to do. And I think commercial real estate loans getting recast, restated this year is going to be a big part of whether this bottomed here, like maybe it bottomed yesterday here. In this case, KRE here is $41, or if it's going to go see the post-COVID low down here, which would be about another 30% drop. But we'll watch and we'll see what's going on. Now, a different way I want to look at banks is just looking at from the day before SVB, which was March 9th, okay? We all learned on March 10th, Friday, March 10th, that Silicon Valley Bank was basically done. That's right over here on the left side. Okay, not the very left candlestick, but one almost, like there's March 9th right before. So you can see that KRE is still 20% below pre-SVB. So let's just kind of shop around here and let's look at some other banks. Here's JP Morgan. Now, JP Morgan is one of the few banks that's above its pre-Silicon Valley implosion, right? So SVB is actually up about 6%. I said SVB, I meant JP Morgan. JP Morgan's up about 6%, but that's going to be the outlier. Morgan Stanley itself is down still 2%. Goldman Sachs, the top price chart is the actual price. The bottom is just telling me the actual price performance. That's how I can know what the return is so quickly. Goldman Sachs is almost break even at just barely. It's only down 0.14% since pre-Silicon Valley Bank. What else we have? Let's look at Wells Fargo. Wells Fargo, okay, down 3.6%. B of A down 5.5. And then I've been talking about USB lately and not doing well, down 22%. And looking the weakest, now based on deposits, US Bancorp is the 5th largest bank in the US. So even the big banks, there's a mixed kind of message coming through of bottomed, not bottomed, where your money is, small banks, big banks. It's a lot of mixed noise right now. What we're looking for are for the lows to get higher. Go back to this right here. We want the lows to get higher and we want the highs to get higher. And that is not happening right now. That change in direction will tell us that a potential bottom is in. Okay, so that's the second thing I want to talk about. And then lastly, I want to talk about the US dollar. Now, I want to talk about it through the lens of the M2 money supply, or at least one of the lenses. And that is basically, if banks are lending, money supply increases. If banks are not lending, money supply contracts. The last time we had a money supply contraction below zero year over year, I mean, you can see it all the way back. I don't put a lot of weight back in 1876 and 1892 and 1907. But there was a lot of deflation going on in the 1930s, and you saw money supply have a huge contraction here. So I'm not saying anything about this being compared to the Great Depression, but contraction is really, really happening with bank lending, and all things being equal, that is not good. That is not a good sign. The other thing I want to show you in regards, and we're still talking about the dollar, is Stanley Druckenmiller. If you know this guy, billionaire, he's probably one of the best traders ever. He came out in the Financial Times and said, hey, my biggest conviction trade, that's right, is going short the US dollar. So he likes to tell people what they're doing, he's doing, and then he does it, and he still does better than everyone else. And then lastly, I'll just show you this, then we'll actually jump over to a price chart of the US dollar. This is just showing Yuan, the Chinese Yuan, eclipses the dollar in China cross-border shares, cross-border deals. I mean, we all expected this to happen, so this isn't necessarily like, oh my gosh, oh my gosh. I mean, look, if you're the second largest economy on the planet, you probably want to settle and do transactions in your own currency. And so they just now switched places. More cross-border deals with China are now done in the Chinese Yuan than in the US dollar. And this is a trend that's been going on for 2 decades, but is now kind of crossed. So that's kind of a big deal for 2023 that's happened. Okay, now let's look at the US dollar. So look at this price chart, and this will be the last. I'm going to put in different currencies, but the top price chart is the US dollar. And I'm going to just keep going back to this part of the price chart over and over. That date is September 27th. It did on September 26th and September 27th that the dollar peaked out. So the one I'll start with is international. This is all world ex-US on the bottom down here. This should almost look like a reflection, like a mirror. So when the dollar peaked, right, EFA, which is international all world, since that happened is up 33%. So we're going to put in some different numbers down here. Let's put in the Qs. So we got a good technology from the exact same date, September 27th. The Qs are up about 17%. Now the Qs did a triple bottom after, but just from the day that the dollar peaked, they're up about 17%. For reference, let's put the S&P in. So I'm just going to do some different indexes. So the S&P bottomed a little after, but as far as where the dollar peaked, The S&P is up 14%. So Q's up what did I say, 17%? The S&P is up 14%. International or all world ex-US is up about 33%. Just for fun, let's just see what Dow Jones Industrial Average over the exact same time period, just to see if we get kind of a theme here. And Dow Jones is up about 17. So the Dow's up about 17 and the NASDAQ 100 is up about 17. Interesting, right? One's not considered tech, one is considered tech. And from that September, what do we have? September 26th, 27th, peak on the dollar. Again, when I say peak, I'm looking at this part up here. What we have is the Dow Jones and the NASDAQ up the same amount. Okay, couple other things I just want to look at. Let's just look at precious metals here. Let's just look at how has gold done since the dollar peaked. So let's see, gold over the exact same time period is up about 22, a little over 22%. So not as good as all world ex-US. Let's throw silver in. I got to squint to make sure I'm typing it. So let's see what silver has done since the dollar has peaked. Silver's up about 37%. So far, everything we've kind of compared, every investment we've compared to the dollar going down. So far, silver is leading. I want to see if we can find something. Let's just go Europe itself, not all world ex-US, but let's just look at Europe itself. The symbol FEZ. Put it in there, FEZ. Let's see what FEZ, which is just Europe. Let's see if that, yeah, 53%. Europe is absolutely screaming. Okay, so let's talk about what all this means. I've given you information here. The McDonald's, the Chipotle, the banks, US dollar. There is a lot moving right now. When the dollar falls, I'm going to go in reverse order. When the dollar falls, it typically and historically helps international shares over US domestic shares. And that is happening. Europe is up over 50% since the dollar has stopped going up, with all world ex-US up 33%. And then all the US indexes are still up between 14 and 17%, so that's good, but nowhere like international. So that's the first thing. Gold and silver doing well, silver doing much better than gold, which you want to see if you believe that we're in a bull-like market with precious metals. Typically, silver outperforms gold when we're in a bull market. So the M2 is falling. If you look at a lot of charts or put that into Twitter, it's actually kind of crashing. That means credit is tightening. Banks are not lending as much. That is not good for a growing economy. I know the second quarter GDP numbers came out and it was the US was growing at 1.1%. So it's still positive, but it's nowhere near, 3 or 4%. And for the last 3 quarters, the GDP growth numbers have been falling. And then the second thing I looked at is banks. And it's a mixed message. They're not having new highs, right? Their highs aren't getting higher and their lows aren't getting higher. They're either at best messy, like JP Morgan, which is the best of all of them right now. Smaller banks are still under pressure. Yes, there's insider buying by some banks, but their lows are still lower and their highs are still lower. So we want to see highs and lows higher to really start to say the bottom has been put in. And then I started this whole thing, just looking at McDonald's and Chipotle and really kind of talking about which part of the market are we talking about? Which part of the market's going to get hit worse at the second half of this year? And it's probably the bottom 90% more than the top 10%. So what to do about it? It's to have a plan that responds to what the market is actually doing and not how old you are or how you answered some risk questions one day 4 or 5 years ago, right? To retire strong, you want to have an approach that aligns with the market, right? During those long bull markets, you want to be in the market, and during those shorter but scary times, you want to step aside. Thanks for being in my world, everyone. Please like, subscribe, leave a note, make a comment. All of those things help. And again, let me know where you think I got it right or where you think I got it wrong. And if you're curious about how we manage money, you can just go into the description and get on our calendar. You can see more about what that is about. Thanks, everyone, and I will see you next week. Okay, bye.